finishes at 1431. So that's your buy trigger right there, isn't it? That's going to be your buy trade to try and get a bit of business there. Now, obviously, if you like it, that would have been a good storyline because obviously you're leaning against that supply. Now, you can see what happened also at 1431. We got the volatility traders coming in on the buy side of the market as well. So if we saw the volatility traders coming in on the buy side of the market as well, we like the idea of hitting that 1431, that candle close. And obviously that's then driven in this idea of the aggregate demand coming in from the likes of the NASDAQ. So with that aggregate demand coming in from that, we can obviously start looking at this idea that there's some trades here looking for supply. Well, we haven't got any supply. So we're not leaning against that supply on pullback. So we don't have any supply. So we can dismiss this trade. Now, the only trade that starts to stand out for me is what happens next. You can see that those volatility guys that bought the 80 are starting to hedge short here at 35 and 36, right? So you look for the 34, 35 candle. And obviously there's the 34, 35 candle there. And you recognize that there are some volatility guys hedging these two candles. So you know that's going to jam the price, don't you? So when those volatility guys here hedge the candles, that's obviously against that buy trade that came in off the bottom edge there, 80. So they're obviously picking off a 5-point winner trade. That's a $250 winning swing. And obviously that's pretty good. Now, obviously what started to see is we started to see some HFT sell programs kicking in at 1439. Well, where's the 1439 candle? It's this candle here. Do you see it? So that's the 1438 close at 1439.00. When did we get the sell trade? When did we actually get the sell trade? Look, Volt sell trigger, HFT sell trigger, Max sell trigger. What time? 1439, 1439, 1439 short sell. You'd have seen it happening live there because it was on the screen when it happened. Did you see it live? Did you see it happening in the real time there? So you would have been selling that candle as a storyline. You'd have been able to get short off the 86s there, just shy of 86s, 85.75. You'd have maybe paid 50 for it, perhaps 85.50 for it. And obviously the sales came in now down to 2.5. 2.5 points. It's a reasonable little cheeky profit. And obviously it was a very, very straightforward story. Remember, the idea is we build the signals. We don't just take one signal. We build the narrative around what the different algorithms are doing. So when we see this Volt buy trade and we see this Max buy trade into supply, we're building that signal around those three pieces of information. When we see that sell, that's a profit take. That's a profit take for us. And then when we see this sell trigger, and that sell trigger all coming in at the same time, we're building a story that there are a lot of algorithms short selling this. And if there's a lot of algorithms that are now short selling this, I want to be short selling this. And obviously we've taken that trade now down for a very, very nice profit of 10 ticks. So the buy trade made 20 ticks. The sell trade made 10 ticks. The drawdown in those trades has been marginal, if anything. And obviously, we've already made ourselves 30 ticks of profit simply from those two major confluence triggers. Two major confluence triggers coming in at that stage at exactly the same time on the screens. 3 sell programs, all different types of sellers coming in at the same time, and 2 different types of buyers coming in at the same time as well. And the buy trade coming into the sell trade, and you're already up 30 ticks in profit, 30 ticks in profit. Not a bad start, considering you've now bottom ticked the S&P, and so far you've now top ticked the S&P at the same time. Now that's pretty good going for an algorithm detector, isn't it? It's pretty good going. There's very few things out there that would be able to bottom tick the S&P and top tick the S&P from those 2 swing narratives. So we're getting close to the perfect narrative now forming. We're getting close to the perfect storyline. I like how it's evolving. And I like how it's actually starting to develop out in terms of that confluence of information that we see brewing in the background. Now, obviously, The trades themselves, there hasn't been any new trades since then. So obviously, you've still got to manage out that trade. You've still got to do what it needs to be done. You still need to take your trades. But obviously, this is all visible from your screens. All of this is visible from your screens. It's up to you to take advantage of that narrative, isn't it? It's always up to you to take advantage of these storylines. Now, in terms of that oil, I think we're getting close to a bid watch on oil, are we not? I think we're getting close to a bit of value for that long oil position. What are we waiting for? Well, not really very much, to be honest. We are basically on a simple, straightforward, short-term sweep into that. Remember, this is the big level from this morning. So obviously, we're watching that big level from this morning, recognizing that there is a possible bid watch available, and we just have to keep watching for that bid available on the oil. So pay attention to it, guys. Pay attention to this. They're obviously working the level just now. So pay attention. So let's see how that S&P trade developed, or equities trade, if you like, instead of just calling it the S&P. Of course, there's always an equity element to this. And we are seeing some hedging on these upticks at the moment. You'll see that from the trade log itself. You'll see there's some hedging coming in as well there. You can see that. So what happened here? Well, you can see as you go through the trade log, we had these hedgers selling. Hedgers are selling, right? Hedgers selling doesn't necessarily mean that they're going to get net short, but hedgers are selling, and then we got the net short position on, right? So what happened next? NASDAQ, take a look. NASDAQ, market makers are starting to add bids below. Watch for trapped shorts. Did you see when that took place? 1440. So what happened here? What happened here at 1440? Do you see what happened? You see what happened at 1440, guys? So 1440 was obviously a break below that little level. Do you see what happened? The market makers were adding bids below. Watch for trapped shorts to buy into. Do you agree that that's on the screen? Do you agree that that was timestamped at 1440? So obviously you could start to look for that trapped short into that area. And ultimately you can see what happened. We managed to get this drive higher, and then all of a sudden we can see this hedging seller coming in at 1445, 1446. So a hedging seller means that there may be an opportunity to join in with it. 1445 there, 1446 there. What happened the last time a hedging seller came in? The price stopped moving up. What happened this time when a hedging seller came in? The prices stopped moving up. You see that? And you see how they do it over several candles there? And they do it over several candles there. So they start hedging into those several candle narratives. Do you see how it develops your thought process? The logic of what's going on in real time. The logic of how you can take these ideas and look to develop out the storyline of the real markets that are taking place. The real market storyline, the real storyline of what is going on, not just some idea of a double tap on a level that doesn't mean anything, but the idea of the reality. So in reality, you could have had those 3 trades today, yes or no, based on the trade log. The reality is you could have, if you understood them. The reality is you could have started to bag profits here and here, knowing that this is a passive sell, knowing that this is a passive sell. So once you see the first one, you probably know the second one will be it. Once you see the first one, you know the second one will probably be it on that move, and you start to develop out your ideas on what's going on here. So you bring in this idea that if you bought here, you could have got rid of it here. If you sold here, you bought here, you could have got rid of it here, and you could have says, right, that's me. That's it. You could potentially have flipped the short. If you like the trade, you know that these guys are hedging short, so you can actually use that to get short if you like the other elements that were coming in. If you like the other elements that were coming in, you could have got that hedge short position into place as well. Now, obviously, what we've done is we've put a little filter at the top here so that if you don't want the other markets and you just want the S&P NASDAQ, for example, you can get rid of all the noise about dollars and oil and gold and bonds and anything else up here. So obviously, you can get rid of all the other triggers. You can get rid of all the other signals. If you just want the gold trades, then of course you can get rid of everything else. You can get rid of all of these. And you simply are just left with all the gold bid and offer watches so that we can see, so that we can just see what's going on in the gold market if you don't want the noise of the other markets, of course, in the background. So obviously that's a choice you make. It's not a choice for anybody else to make, but that's a choice you make. So you can see that, it's starting to become, what it is as a usable product. It's starting to become something that we can actually use. These are the 3 trades that you would have had based on it so far in terms of the S&P or equities. These are the 3 trades you would have had so far. Is it worthwhile having those 3 trades? Well, we talked about this being 30 ticks so far. Well, if we added this trade here from 83s and an exit at 88s, it's another 5 points, another 20 tick trade, isn't it? So that's 50 ticks of profit so far. $600 with almost no drawdown based on the triggers themselves. $600 so far with almost no drawdown based purely on the triggers, not including the hedge short, not including this hedge short, which might have scratched. This hedge short from 88s has already dropped down to 84s. So that could have added an extra Brucey bonus there of another 16 ticks into your trade. But obviously that's based around other things helping you out with that hedge short. A hedge short, hedgers are selling, is obviously could be simply just a hedge trade. It might not give you any directionality, but it should be enough to jam the price. That's what we say. It should be enough to jam the price. And obviously the idea there is going to be a volume increase that hedge is going to bring. And the probability is high that the price will jam. So, I mean, if you wanted to add those in, remember, this is a very passive trade. You don't hedge aggressively, you hedge passively. Why would you hedge aggressively? If the price starts dropping in your favor, you don't need the hedge. Do you know what I mean? Does that make sense? If it doesn't, come on, guys, think about it. So if I've got a position here and I need to hedge that position, if I need to hedge that drive higher, then of course, if I need to hedge the drive higher, or I need to pause the drive higher, if I need to take profits against that drive higher, if it starts dropping, I don't need to do that trade anymore. On its own, I don't need to do that trade anymore. But obviously, if it keeps driving, I do need to do that trade. So perhaps what's going to happen is I'm going to try and take that position there because I've got a volatility position that I need to hedge by selling this product. So obviously, if it drops, I don't need to hedge that volatility product anymore, do I? If it drops, I don't need to do that trade because it's doing it on its own without me taking any of that position. So therefore, it's only a passive sell. It's not an aggressive sell. That's why we talk about it being a hedge trade. It's an aggressive sell. So we start looking for that aggressive sell into that as a storyline. We start trying to check the trade storyline as it evolves. And if it drops off the top edge naturally, it's good. But obviously the idea there is it should drop off the top edge naturally. If it doesn't, in other words, if the next candle upticks, you know they're going to get busy. So therefore, that could have been a short, and that could have been a short sell there. So we know they're already doing it. So we could take those trades as well into that as a storyline. Looks like they've trapped some traders there in this candle here. Do you see that? So the NASDAQ market makers are adding offers above Watch for any trap buyers. Well, you can see that the candle rallied here at 14.53, and that obviously allowed you to sell into that buyer at 14.53. That would have been a little cheeky short to 86.5. 86.5, do you see that? So we can obviously look at that as a quick short sell into that 86.5 print. And obviously we've managed to get a little quick hit out of that for $100. A little quick sell into that for $100. Not a bad cheeky little outcome, is it? Not a bad little cheeky outcome. So if you followed the triggers alone, these should have been your trade opportunities, just on the triggers. Now, one thing I've got to say is that these triggers aren't trades. These are things that are actually triggering. They're not telling you to buy or sell. They're telling you what somebody else is doing according to the stuff that are happening. These aren't buys and sells. These are somebody else's buys and sells according to what's developing. It's like the Jack Ryan, according to what's developing, they should be buying or selling into this as a storyline. And therefore, we build a picture around what it is they're actually doing. And that's what they're doing. So this is a volatility hedger selling. It's not you selling, it's a volatility hedger selling. Volatility hedger showing. The trigger for the buy trades, sure, 14.30. So the trigger for the buy trades is here, ES HFT buy program. Do you see it? So the max buy program there and the volt buy trigger there at 14.31s. So they're the two buy triggers there at 14.31, which was this buy trigger here. Remember, the timing's accurate on this one. And as far as this buy trigger here at 14.41 is concerned, that obviously closed at 14.42. So if you're looking at this as a storyline, you can see here, the NASDAQ market makers are adding bids below. Watch for trapped shorts to buy into. And that was at 14.40. Well, we need to wait for the shorts to get trapped. So there's the 14.40 trap coming in here. Do you see it? So there's the trap coming in. So there was no point in trying to do the trade here because we never had anybody trapped on that trade. Nobody was obviously trapped at that stage because we've got all that liquidity. So we wait for the trap and then we strike the trap. We hit the trap there. And obviously that little trap sent that price beautifully back to the upside. As a storyline, a perfect narrative at that point. Now I'm interested in this trade setting up here because obviously we can see that there's a big paycheck liquidity up here. And it looks like the NASDAQ, the S&P market makers are going to start offering into that trap. So that might be something of interest going forward. So we can start watching the possibility of that short sell trapping into this liquidity. But obviously, again, we've got to still agree that we want that as a sell trade. We've got to see the trap. We don't just assume it's a trap. We've got to see the trap. We've got to see the buyer getting jammed. We've got to look for that buyer getting jammed into that higher price. And if we spot the buyer getting jammed into the higher price, we've got the opportunity to expose them, haven't we? We've got the opportunity to expose that trade, and we've got an opportunity to go ourselves into a bit of business against that as a storyline. Now, obviously, they're trying to pump and dump it. And I still don't see the trap buyer on this. I don't actually see the trap buyer yet. Does anybody see the trap buyer? I don't see them. So obviously this is going to still be a trade that I think still has higher to go at this point for that trap to take place. But if they show up as a lean, I'll be on it, right? I'll be on it and I'll be ready to hit those buyers as soon as I get a lean against them. So basically I can trail up behind a buyer. I can trail up behind the buy leans and I can whack in a quick sell stop order as soon as I get anybody involved in that trade. And I can hit a quick trade out of it. Let me show you what I mean. So there's the trade I took out of that trade narrative there. See it? So there's the trade. So I'd got this idea that they were starting to add offers above. Now, I don't know whether they're going to add offers above here or whether they're going to add offers above here. Okay? So I don't know which one it is. I don't know they're going to start offering above here or whether they're going to start offering above here. So I can obviously just watch to see if any of them start to show up. I can start to watch this. Now, obviously, at this stage, that offer isn't visible in the futures contract, is it? The offer is definitely not visible in the futures. So I'm watching for that offer to show up. And obviously, the idea here is they were obviously trying to pump some bids into that as a storyline. They're trying to pump some bids into that as a storyline, and it's not working because they're not getting any buyers showing up. They're not getting any buyers showing up. And because they're not getting any buyers showing up, I was having to wait for that buyer to get jammed. And when that buyer there got jammed, I took my shot at it. I took my shot. Now, obviously, whether you disagree with it, whether you agree with it, it doesn't really matter. What the point is how I ended up trading the story. How did I end up trading the storyline at that stage? So obviously, it's still important that you do the trade idea. It's still important that you try and figure out, what does that mean for me? What does it mean for me? So obviously, it's up to us to then start working into that as a book. It's up to us to start working into that as a storyline, as a narrative. And as we work into that narrative, we try and figure out whether we've got the right narrative, how the narrative is going to unfold, how I'm going to take advantage of it, if anywhere. And obviously, from that point onwards, I can make a decision as to whether I'm taking a play. I can make a decision as to whether I'm taking a play. I still don't see any trap buyers, by the way. There's a bid on the book. There's a small delta buyer on the book. I don't see that they're actually doing any trapping on this just yet. So obviously, we're aware of it. It's obviously a data release. We know that 3 o'clock has some data on it. You can see that they did trap a little spike on it. If you wanted to take the trade, we knew that they were going to trap a spike. How did we know that? Because we can see that the S&P offers again at the top edge. Do you see it? So at 14.57, we saw that the market makers were again adding offers above watch for trap longs to sell into, right? So obviously, is that not exactly what they did there on the spike? And is that not what they did here on the higher price here? Did they not add offers and then trap any buyers at high prices? Is that not exactly what they just did on those two candles? Sure. So obviously, it was up to you to see it. It was up to you to try and get a quick trade against it. And it made money. Never made much money, but it made some money. And that's okay because it's a short-term piece of information. They could start pulling away those offers at any stage and the price will rally against that storyline, wouldn't they? So they could pull away those offers at any point and obviously the price might rally. Okay, so it's a short-term trigger. We get the idea. We see what's going on. We don't get any other triggers. You know, we had this sell program that came in behind us at 57s. That was good. That was good news because obviously that meant that we had a little bit more confidence to work that short initially, at least. A little bit more confidence to work that short when it was coming up here. And obviously when it started to get that top line, an easy quick short sell into that. And again, an easy scalp profit. Scalp profit. These are algorithms. They're not macro swing trades like some of the oil plays. These are literally 1 minute, 30-second, 5-second algorithms that are giving us some of that storyline to breathe some life into some stories in the background. And that's all we're trying to do, guys, is breathe a little bit of life into what's actually going on in here. Because a lot of people find it difficult to get a handle on what the storyline narrative is. It's about building that storyline narrative. I'm actually in a short S&P trade just now off the 90s, and I am just using these downticks at 88 to book some money.